having less leverage does make sense to me, though. And is that what's ultimately going on here?
Yeah, so these funds are basically taking stock after the big vol blow-up that we saw back at the beginning of February. Now, obviously, at the time, we had the collapse of XIV, which was an exchange-traded note that a lot of people were invested in and lost a lot of money. And now some of those products that have actually survived that chaos are starting to make tweaks or changes to make sure that they can really survive another bout of volatility.
So the basic idea is when we get these vol spikes, it's usually the short months VIX futures that surge, and the out months tend not to be as volatile. So what these products are now going to do is short on the out months that don't move by as much. And while it makes the likelihood of a total blow up less likely, they're probably not going to be in the good times as much of a moneymaker, are they? Right.
So there's basically two different ways in which people are approaching this kind of shift. So as you point out exactly rightly, there's a company called ProShares, which runs both a short and long vol strategy. And they're basically, rather than trying to go for sort of futures that expire in under 1 month, they're pushing out to 2 to 6 months. And yeah, the real issue with that is that you don't necessarily get the really great returns. You still get pretty good ones. I think rather than 190%, you might get 80%.
Not worth it.
But the good news is you might not blow up in the interim.
That's exactly it. And then there's a second way in which people are changing their products, which is what ProShares announced last night, which is that what they're trying to do is they're actually cutting back on the way that the amount that they're trying to gain on the fund. So instead of kind of like pushing for a totally inverse fund, they're going for a 0.5 inverse fund.
Oh.
Instead of going for a 2 times levered, 2 times sort of the VIX, they're going for a 1.5 levered the VIX.
I mean, the backdrop here is that there's still quite a bit of demand for these products. You would think after the blow-up of XIV that people would have scurried away and said, you know what, I'm not going to touch that because it's a trading vehicle. It's not a buy and hold investment. Instead, there's plenty of money coming into these products.
In some respects, there's no such thing as bad publicity, right? I mean, now that people see these products, they can look at the returns, and the returns on these are pretty good if you look at them. But the problem is that they're not meant to be held, right? So if you are a sophisticated investor that can move in and move out, you can absolutely make a very decent sum on these. But if you're a retail investor that doesn't necessarily have the ability or the desire to look at these products on a day-to-day basis, those returns are still there, but the risk of being wiped out is very much ever present.
Now, speaking of getting wiped out, I have a chart here on the terminal, and this is far out of the money call options on the SVIXY. So basically, these are bets that in January 2020, it's going to be way higher. But because it no longer has the leverage juice to rally like the way it did from 2011 to a month ago, these fell over 80% today. So it's sort of a way of demonstrating that, yes, they may be safer, but people just don't see the massive long-term gains, not worth big bets in the future.
Well, this is what I find really interesting about exchange-traded products generally, is that you've got to remember there's a whole ecosystem around them, right? There are options on the ETFs, there are options that reference the ETFs, there are options, people are using them instead of options. There are derivatives, futures, all related to the ETF environment, right? And when you have a change in strategy like these ETF and ETPs are doing, you have a real implications and knock-on impact to the underlying markets.
Very, very quickly, because I'm going to get shouted at, are the prospectuses being updated?
Absolutely, yeah. Okay. We're seeing kind of amendments filed to update the prospectuses and make sure that investors know quite how much time they have.
Because I'm sure people are going to read.
And now they're going to be coloured red.
87 of 183 pages.
Yeah, exactly.